Today, Bitcoin's back above $53,000. Microstrategy buys another 3,000 Bitcoin, bringing the company's total holdings to more than $10 billion. And Anthony Georgiades, the co-founder of Pastel, breaks down VC trends in crypto. World, I'm Jordan Smith. Crypto prices in the green to kick off the week, with Bitcoin bouncing back above $53,000. As of noon Eastern, Bitcoin climbed nearly 4% to $53,400. Ether held above $3,000, rising 3.75%, and Cardano soared more than 5%. All right, let's talk about the top stories. Microstrategy purchased another 3,000 Bitcoin tokens for $155 million. The company's executive chairman, Michael Saylor, made the announcement on X today, writing that the Bitcoin was purchased at an average price of around $51,800. He also said that as of yesterday, Microstrategy, which is the largest corporate owner of Bitcoin, holds 193,000 coins, which was acquired for about $6 billion at an average price of around $31,500 per Bitcoin. Those holdings are now worth more than $10.3 billion. As of noon Eastern, MicroStrategy shares traded higher by nearly 14%. Meantime, blockchain security company PeckShield is warning that MicroStrategy's X account had been compromised. In an apparent phishing exploit, the attacker put a now-deleted post on the company's X page that promoted a new coin. Those who clicked on it were directed to another website. Crypto sleuth ZachXBT said on X that the hacker was able to steal about $440,000 from the compromise. We reached out to MicroStrategy but didn't hear back right away. Next, crypto exchange Bitforex seems to have gone offline. The Hong Kong-based crypto exchange's website appears to be inactive, and when trying to access the site, a notice comes up saying, "Sorry, you have been blocked." This comes after about $57 million was reportedly withdrawn from Bitforex's hot wallets on Friday. ZachXBT posted on X this morning that the withdrawals have stopped processing, and the Bitforex team has been unresponsive to user requests on X and Telegram. The official Bitforex account did not post anything about the situation. In January, the former Bitforex CEO said he was stepping down from his role after 6 years at the crypto company, and CoinDesk reports that Bitforex was one of 4 crypto exchanges flagged by Japanese regulators last year for operating without proper registration. Last, the U.S. Department of Energy agreed to temporarily halt its emergency survey of energy use by crypto miners after a lawsuit by Bitcoin miner Riot Platforms and an industry group. According to this court order from Friday, the U.S. Energy Information Administration, or EIA, which is the DOE's statistical arm, will suspend its mandatory survey for 1 month and sequester data it has already gathered from Bitcoin miners after starting the process earlier this month. The day before, Riot and the Texas Blockchain Council sued the Biden administration, seeking to block the survey and arguing the agency failed to allow proper public comment and that the survey could harm businesses by forcing them to disclose confidential and sensitive information. The EIA argues that the information is needed to assess concerns that the increased use of electricity by crypto miners, prompted by high Bitcoin prices, could pose an imminent threat to energy grid reliability. All right, let's talk more about crypto markets for our main story. I spoke with Anthony Georgiades, the co-founder of the Pastel network, to get his reaction to crypto's latest rally, and I also asked him about the latest VC trends after funding for crypto projects increased for the first time in 2 years. Let's start with the rally in crypto today. Bitcoin jumping to $53,000, Ether up to $3,100. What should investors know about these recent movements in crypto, and how much of this momentum that we've seen so far do you think is still out there for these repeated gains that we've had this year?
Definitely. Well, when it comes to the price of Bitcoin and the broader digital asset market right now, there's a handful of variables at play. So first and foremost, the crypto market in general has been keeping a very close eye on obviously the broader monetary policy, the Fed's view, etc. We've seen a tremendous amount of surge in overall stocks. Obviously, NVIDIA's earnings, for example, broader surges across a variety of semiconductors are continuing to show broader strength in overall markets. And we're also looking at key data points from an overall economic perspective, like inflation and whatnot. And when you put this all together, there is a lot of cementing of the Fed's view that there will likely be a rate decrease in June and July, but potentially even in March or May. So there's been a significant amount of risk on activity across broader markets, digital assets in particular. And then you take that in tandem with certain other events, such as the Bitcoin halving, as well as a variety of Bitcoin ETFs, and then potentially as well some of the election bets that are taking place later this year and the bipartisan support that may be driving narratives towards overall regulatory clarity for digital assets.
Yeah, I was going to ask you how much you thought that the crypto market was really driven by this correlation with tech stocks that we've seen in previous years, or if it's moving away from that. But in your view, we are still correlated with tech stocks in some way, but also macro pressures are really driving the crypto market. I want to talk about the comparison between Ether and Bitcoin right now. Ether's outperforming Bitcoin by about 13% this morning so far this year. We've talked on the show about how much of that is to do with hope for spot Ether ETFs coming sometime this year. But is that all that's really driving this outperformance right now? Is there anything else you're seeing that could explain the outperformance for Ether compared to Bitcoin?
Well, you touched on a couple of things, right? You mentioned the kind of correlation with tech assets. And we are of a very strong opinion that over time, that correlation is going to continue to break. Now, Bitcoin and Ether are two very, very different types of assets. You have one that participates more as a safe haven digital gold-like asset in Bitcoin. And then you have another, which represents more of the world of Web3, digital native-based economies, technology businesses, etc. They have very different underlying economic models, supply-demand equilibriums, obviously different fundamental protocol components that really drive both network activity as well as deflation mechanisms. So to your point, as we've seen more of this risk on narrative, I do think that that is more beneficial for some of those native Web3 currencies like Ethereum, those digital assets that are more predicated on both technology-based innovations and businesses. Whereas we've potentially seen a little bit more of that break in correlation where Bitcoin, which while it does have those same characteristics and attributes, it also has some of those other attributes that are more in line or akin to assets like gold, oil, etc.
I want to also expand that conversation a little bit. You're also the co-founder and general partner at Innovating Capital. And in context of talking about the potential for Bitcoin or the comparisons between Bitcoin as a network versus Ether as a network, PitchBook also said in its report that Bitcoin layer 2s and scaling solutions for Bitcoin's network are going to be a big focus for this year. Do you agree with that? And do you also think that takes away from some of the argument that they're very different assets if we're working to more closely align Bitcoin's network with some of that Web3 potential or some of those other applications that Ether may have?
Yeah, that's why I was careful to kind of say that they weren't completely disparate assets in that respect. I think that what's happened with Bitcoin over the last couple of years, if you look at stacks or ordinals or things like that, have completely changed part of the narrative of Bitcoin. As a long-term Bitcoin holder and really believer in the broader Bitcoin network itself, it already has those characteristics of true decentralized money, of true decentralized assets, right? It's the only asset in the world that is sufficiently decentralized with completely controlled supply and deflationary mechanisms in place. Now you add on what we kind of view as a call option on Bitcoin to potentially be looked at as both a replacement for certain sovereign currencies, but as well as some of those Web3 narrative drivers. I mean, over the last couple of months, Bitcoin has had the largest amount of NFT volume and trading activity versus comps like Ethereum and Solana. I would have never have thought that a couple of years ago. The innovation that we've seen is amazing. And I'm super excited to see, obviously, a lot of that start to play out across both some of those scaling solutions and really tangible business applications. I think we'll continue to see that narrative drive. And to your point, Bitcoin's overall characteristics and potential applications continues to grow.
Let's end this conversation by talking about VC funding. We saw it tick higher for the first time for crypto in 2 years. Do you expect that momentum, that trend to continue this year? And which types of projects are most attractive right now in the crypto space for finding funding?
Definitely. The VC industry is extremely fascinating and interesting because there is typically a lot of what I would call self-fulfilling prophecy in certain aspects of it, as well as key market validating points. So we saw obviously a massive chase into the AI boom. We saw a cool off in Web3 when the Web3 market was extremely down. Obviously, as we come off the backing of some of the collapses like Three Arrows and FTX, we're seeing a lot more stability in the broader market. VCs are getting more comfortable re-entering the overall Web3 space. And I think to your point, the narrative has really shifted where there's a lot more potential opportunities for innovation, whether that's really the sort of emergence of AI applications. Pastel, for example, is working on tools that offer decentralized LLMs across the broader Web3 environment. Then you also have areas for scaling solutions, such as those on Bitcoin that we touched on. So I think that there's a few key areas of both innovation that have become more opportunistic, such as obviously the world of AI, L2 scaling solutions, and even some of those application-specific L1s. And then you obviously have the fact that the Web3 market has seemed to found a much more stable foothold, and the future outlook over the near term seems to be much more positive, which has really led to this resurgence in VC funding.
All right, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.